Hey everyone, welcome back to Corporate Decoder. Today we're diving into Volato Group's latest report, and let's just say this one has more twists than a private jet on a joyride. Will they soar to new heights or crash and burn? Stick around to find out. Volato Group is giving us a look at their financial health, and it is a mixed bag of good news and some definite red flags. They're in the private aviation business, which sounds glamorous, but behind the scenes there is a lot going on. Let's kick things off with their balance sheet. As of the 30th of September 2025, they have assets totaling about $13.6 million, but last year, at the end of 2024, it was a whopping $46.3 million. That is a significant drop. Now, look at their liabilities. They were around $62.6 million at the end of 2024. But that is shrunk to about $9.5 million by September 2025. That sounds great, but when you compare the assets and liabilities, it paints a stark picture. They've gone from a shareholders deficit of over $16 million to a tiny shareholders equity of around $4 million. It looks like they've managed to cut debt, but their overall asset base seems to have contracted considerably. Now, let's talk about how much money they're actually making or losing. For the 3 months ending the 30th of September 2025, they reported a net income of a little over $7 million. That is a huge flip from the same period last year when they had a net loss of nearly $4.5 million. This giant leap into the black is mostly thanks to a massive increase in other income net, which jumped from a measly $56,000 in 2024 to over $5.6 million in 2025. They also managed to bring down their interest expenses significantly. Looking at the bigger picture, the 9 months ending the 30th of September 2025 shows a total revenue of about $50.7 million. That is up from about $38.7 million in the same period last year. This increase is largely driven by aircraft sales, which went from $38.1 million to almost $50 million. This is a positive sign showing they are selling planes. However, their cost of revenue also went up from $32 million to over $42 million. Even with those sales, it seems like the costs associated with them are also rising. Let's break down that revenue. For the 3 months ending the 30th of September 2025, revenue was only $381,000. That is a massive drop from $38.5 million in the same quarter last year. This huge difference is because they didn't deliver any aircraft in the third quarter of 2025, while they did in 2024. This highlights how much their revenue relies on large aircraft sales, rather than a steady stream of smaller income. Their subscription revenue from their Vaunt platform is growing steadily from $316,000 to $381,000, but it is a drop in the bucket compared to aircraft sales. And with that revenue drop comes a drop in the cost associated with those sales. Cost of revenue went from over $32 million in 2024 to just $123,000 in 2025. For that 3-month period again, this is directly tied to the lack of aircraft deliveries. Now for the not so glamorous part, selling, general and administrative expenses. These costs decreased nicely from over $4.2 million in the third quarter of 2024 to about $2.8 million in 2025. And for the 9-month period, they dropped from over $12 million to about $7.7 million. This is likely due to cost saving measures they've been implementing, which is always a good sign when a company is trying to boost its bottom line. This next part is a bit technical, but it is important. The loss from change in fair value of financial instruments shows a loss of about $539,000 for the 3 months in 2025. This is mainly due to how they account for their convertible notes and an investment they made in a company called M2I. Last year, this line item was zero, but in the 9-month period of 2024, they had a loss of almost $3 million related to a forward purchase agreement that was eventually terminated. It looks like they're still navigating the complexities of financial instruments. Interest income and expenses have also seen a significant shift. In the 9 months ending the 30th of September 2025, they reported net interest expense of about $3.6 million, which is much better than the nearly $5.6 million in the same period of 2024. This improvement is largely due to paying down some of their loans, particularly the SAC leasing aircraft financing. When we look at net income from continuing operations, it's a dramatic turnaround. For the 9 months ending the 30th of September 2025, they reported income of $5.4 million, a massive improvement from a loss of $14.2 million in 2024. This is largely driven by those aircraft sales and the positive other income from settlements. Now, they've also put some of their business operations into discontinued operations. This is basically activities that are no longer part of their core business, like their old aircraft ownership program, which they transitioned to fly exclusive. For the 9 months ending the 30th of September 2025, these discontinued operations actually generated a profit of nearly $5.8 million. a stark contrast to a massive loss of almost $24.5 million in 2024. This segment of operations seems to be a source of positive cash flow, now after a rough patch. This brings us back to the balance sheet and the overall financial health. We see a shareholders' equity of about $4.1 million as of the 30th of September, 2025. That is a significant improvement from a deficit of over $16 million at the end of 2024. This turnaround is encouraging, suggesting they've improved their financial standing. Let's look at where the actual cash is coming from and going. For the 9 months ending the 30th of September 2025, they used about $2.4 million in operating activities. This is a big improvement from the over $10 million they used in the same period of 2024. The financing activities provided over $2.8 million in 2025, mainly from issuing convertible notes. While in 2024, financing activities used about $486,000. They're managing to bring in more cash through financing and cut down on cash used in operations. Speaking of cash, their liquidity situation is cautiously optimistic. As of the 30th of September 2025, they had about $4.4 million in cash. They've historically relied on financing, and they're still looking to secure more capital through convertible notes and potential equity or debt sales. The big question remains whether they can consistently generate positive cash flow from operations given the lumpy nature of aircraft sales. Now, every company has risks, and Volato's are pretty significant. They have a major pending merger with M2i Global Incorporated. This is a huge deal, and it comes with a lot of IFs. There is no guarantee the merger will even go through, and if it does, Volato shareholders will face significant dilution, meaning their ownership stake will be smaller. There is also a risk that if the merger doesn't happen, the company might consider dissolving. This creates a lot of uncertainty for investors. They've also just issued a fourth tranche convertible note for $2.2 million in October 2025. This shows they're still actively raising funds through debt, which adds to their financial obligations. In another strategic move, they entered into an amendment with Fly Exclusive. This amendment gives Fly Exclusive the option to buy certain assets from Volato and take over some obligations, and vice versa. It also involves some cash payments and stock exchanges. This signals a continued shift in their operational strategy and potentially further disentanglement from certain business lines. Overall, Volato Group is in a transitional phase. They've dramatically improved their income statement from losses to profits, largely due to shifting their business model and some favorable one-time income events. They've also cut down on debt and are showing better cash flow from operations. However, their reliance on major aircraft sales for revenue creates volatility, and the pending merger with M2i Global Incorporated introduces significant uncertainty and dilution risk. The company is still very much in a growth and restructuring phase, and whether they can successfully navigate these challenges and achieve sustained profitability remains to be seen. Alright, that is our deep dive into Volato Group's latest report. What do you think about their financial turnaround and the risks ahead? Let us know in the comments below if you found this breakdown helpful. Smash that like button and subscribe for more corporate breakdowns. And don't forget to join our Discord community, linked in the description for real-time discussions and more insights. Thanks for watching, see you next time.